You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts, Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com.
All right, everybody. Welcome back to the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from a little thing we like to call the old Options Insider Radio Network, beaming to you from the Options Insider Studios. If you guys are ever in Chicago, maybe you want to swing by, say hi. We'd love to see you. Maybe we'll set up for some little, some in-person studio audience. That will always be pretty fun. But of course, if you can't make it in person here to the Options Insider Studios, we want to check out all of that great content we put out every day, pretty much, multiple times a day. Where can you find all that options goodness? Well, of course, the mothership, the flagship, theoptionsinsider.com. Head on over there. Don't just surf over there for the radio. I know all you radio heads like to go over there and stream, but there's a lot of other cool stuff there. Check out the breaking news from the options market, the unusual activity, the analysis, education. Trust me, I pay a lot of people to put a lot of good stuff up there. So go there and read it. It makes everybody happy, including me. And of course, if you're hardcore for the radio, you can also find it iTunes, TuneIn, Stitcher, pretty much wherever you like to find your favorite options content. We are there. If not, let us know. We'll make sure it's available where you want it. And of course, speaking of where you want it, we also have it in the App Store for iOS, Android, and indeed the Fire OS. So if you're tuning into the show for the first time saying, man, where can I get all this great stuff on a more frequent, regular basis, updated and delivered to me fresh daily? Well, there's all the places you can do it and much more. And joining me on the old program today, starting off with the man beaming in, who knows where he's beaming in from. Could be beaming in here from the options mecca of the world, downtown Chicago. Could be out in the suburbs, out there in Riverside. It could be, who knows, parts unknown. Let's check in and see where he is. He is a greasy meatball himself, Mr. Mark Sebastian from OptionPit.com. Mr. Greasy Meatball, welcome back to the Option Block program. And let's play Where's the Meatball? Where are you beaming in from today?
Where's the meatball? I'm at the veal farm. No, I'm atop our world headquarters here at 190 South LaSalle, overlooking the city here on the beautiful 30th floor. So things are good.
Where's the meatball? Probably sounds like some of the movies you like to watch late at night when everyone else is asleep in the meatball.
Well, that's based on that movie about me, Cloudy with a Chance of Sea Bass.
Yes, of course. Well-known children's film from the mid to late 80s. All right. And also joining us on the old program today, the man beaming in from also out there in the suburbs of Chicago, a little temperate place, a tropical paradise, perhaps you may have heard of, called St. Charles, Illinois. You know him, you love him. It's Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to the old Option Block program, sir.
Always happy to be here, broadcasting from the suburbs.
Yes, the old suburbs, as we like to say, as we downtown folks say of you folks out there in the sticks.
Right. That is us.
All right, with the team assembled, the all-star panel ready to roll, we're going to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody. Welcome to the Trading Block. This is indeed the portion of the program where we break down what was moving, what was shaking, what was catching our eye in today's activity. Ended up on a bit of a down note, but it was a bit of a vacillating day. Before we get into that, we are recording this on Monday, August 31st. For all of you playing the home game, like to follow along. There you go. There's the date for you. And of course, like I was saying, it was a bit of a vacillating day, ending up toward the downside. Most of the major indices off about 0.5% or so. S&P off 0.6%, Dow off about 0.5%. The Qs leading the charge to the downside, off nearly a full percentage point. Of course, that kind of belies the action we saw throughout the day. S&P actually closing right around 1976, 77 or so, which is pretty much right in the middle of the range it had for the day. Got up to about 1986, got down to about 1966. So pretty much right smack dab in the middle of that range. Make of it what you will. Certainly not the tumultuous day we've seen over the past week. In fact, from the last week's frame of reference, a day that's less than 1% is pretty much a snoozer. This is nothing to write home about, but still some interesting activity. And of course, with most of the major indices leaning towards the red, that means the old VC, the old VIX cash, leaned towards the green, up nearly 2 handles to about 27.86 or so today. Perhaps, Uncle Mike, we will start with you because you are in, the closer of the two. Actually, I'm not sure. Sebastian might be a little bit closer, but still. Of course, he's downtown, so he is closer. But still, I picked you first. You get pride of place today. Uncle Mike, in addition to the BBI, was it high or low today? And what else caught your eye in today's relatively quiet activity?
Right. Relatively speaking, it's definitely quiet. So with that, a couple things that were on my mind today. The main thing that really caught my eye, in the macro markets, the S&P were down just under a percentage point. Probably the main story of the day that really is catching my eye at this point is oil. With oil coming up like it has, this is something that's really catching my eye. I think that right now, I don't know if this is I'm not saying that we've seen the bottom of oil by any means, but I think the big story right now is the fact that we've had such a run up in oil. If you look at XLE on the day, that's up a percentage point. With the S&P down a percentage point. So I think oil and energy are something to where if you're looking to buy the dip or buy the bottom, or closer to the bottom than the top, which I do think we are in oil. I still think we are closer to the bottom than we are to the top. I think that's a definite thing to take a look at. Apple, the company with which I do need to mention so we can keep our ratings up for the show, that's down about 50 cents on the day. So with that, it's not a huge thing. But if you are a bull and you're looking to get in to some pretty big names at lower prices, there's a lot to offer out there right now. Johnson & Johnson, for example, it's down at the 93 level. Walmart in the lower 60s. Verizon's down at the 46 level. IBM is at the 147 level. There's a lot of stocks right now to where if you're looking for an opportunity to get into the market and you feel like maybe you missed the dip last week, there's still a lot of stocks out there with which if you are a bull, you can still get into them at a lower level.
And, of course, you mentioned XLE. Sounds like those 30 puts you were writing out there all day long worked out pretty good for you.
Yeah, I was sweating them for a while, but I think I'm okay now.
I think you're in the clear. What were they, SEP? They were SEP 30 puts, right? So they were coming due pretty soon.
I don't remember. Whatever you say.
I'm going to say SEP.
It's on the Longo exchange, so I'll take your word for it.
Yes, I have many, many trades lurking over there on the old LE, the Longo exchange. Not to confuse with the London exchange or a lot of the other ones floating around out there. All right, Mr. Greasy Meatball, same question to you. Today, compared to last week, certainly a bit of a quieter session. Of course, as the close is processing, we are getting down a little bit farther south in all of the major indices, moving farther into the red. But still, from a last week perspective, this is a snoozer, a bore fest, would you say? Did you have a hard time staying awake at your terminals today?
The SPX was soft, but the VIX was not. There was some crazy action into the last hour. We've got the S&P off about 17 and then down. If you really look at where the close is, the futures are down another $3.5, $4 after the bell. So really, we're going to end at the 3:15 bell down 20. And the VIX futures absolutely exploded today. So you got the VIX up to about 28.40 today. So believe it or not, upside pressure. The VIX, SEP was up 1.75, so almost as much as the cash market. Then you had OCC for a period of time outperforming SEP, and November almost performing as well as October, and volume across all those VIX contracts is heavy. There's huge volume in October on top of big volume in SEP and some decent volume in NOTE. Really some really odd volume toward the on Friday and today in some of the back months. We saw kind of toward the end of the day on Friday, the February future get bid up as much as $1.25. There's some really weird stuff happening in the VIX futures complex, maybe related to a large over-the-counter trade, maybe related to kind of perceptions of what we're in right now. But we're going to settle today with the SPY, at the 315 close, which is just hitting right now. SPY's off $5 or 50 cents. The FUs are off $5. That is an ugly after the bell. That's puts us back down more than 1%, and points toward maybe some people that are a little terrified of what might happen tonight in China. At one point we were down 3% overnight. So there's some, as I look at the term structure, as I look at the play, the way the futures are trading, everyone seems to bet on the VIX breaking back above 30 and maybe 40. So what I'm seeing is the potential for bad stuff.
And we kind of
if you're a bull.
Yes, we kind of joked about this on Vol Views last week. We both kind of made the, at the time, seemingly outlandish, I think myself partly just to kind of generate conversation, and I'm sure some consternation amongst our listeners to say, how dare you say something like that? But also because, like we were talking about on the show last week, that a lot of this stuff was kind of afoot out there in the term structure and in the options that seemed to be indicating that there was yet another shoe or perhaps multiple shoes left to drop here in the marketplace. And you're right, as we are going into the close now, it's still coming off a little bit out there in the broad market. We both kind of half jokingly, but seriously as well, joked that at this time next week on Friday, we would be higher in the VIX cash. And at least so far today, it seems like that prediction is holding up pretty well. But you're right, Mark. There is. I was kind of watching some of that stuff unfold today as well out there in the futures, and it does have the ear of something being unwound, a large time spread in the futures going off, because the term structure, I think, is only technical term you can apply to it is funky.
It's really screwed up, super flat. You don't expect to see the term structure flattening when the VIX is spiking, and you expect to see that. You expect to see it flatten as it spikes, but once we enter in a backwardation, you expect the term structure to get steeper, but the entire complex is somewhat keeping up with September, and it's just, I've never seen it move like this before. So I'm not sure what's going on, but it makes for an interesting case for potentially some sort of trade in VXZ as opposed to VXX. But we spent a lot of time talking about XIV and some of the different things like that, and now we're in a position where people that are so used to being short or long XIV and short VXX are going to have to learn that there are periods of time where you actually want the opposite trade on, and that's that trade right now that we're in, and it is super interesting. I don't know what's being unwound, but I'll tell you, you could not talk me into a long position without a collar on, and those that are exposed that are not using either an option plan or some sort of volatility hedge like a VXX or a VIX future are asking to get completely crushed the next couple of weeks the way the terms. Now, I could be wrong, right? We could turn around, go right back to above 2,000, but the way things are trading, we're going to test that 1904 level. We may test that 1872 level. We may go way lower because the complex is trading like VIX is going much higher, not VIX is going to relax right now.
Yeah, I tend to concur, and maybe Tosaw will find this as heresy because he is indeed the diehard bull amongst us. But today I don't have a lot of underlying in my holdings, mostly options, but the few that I have, they're kind of longer term, I tend to leave. I don't really like to touch them as much. To kind of, some retirement accounts, I let them just kind of do their thing. I'll do some income trades on them every now and then, hedge every now and then if I have time. But I tend to keep them in relatively quiet stuff because I don't have time to to watch them on a regular basis. I went through today and just pretty much liquidated all of that to put it in cash because I'm kind of the same as you. I don't have time to babysit them. I don't have time to even collar them really. So I want to see how this plays out. And today actually was some of the few days of actually some updates in some of those names, which was kind of odd. So that I would take the bounce and get out. But you're right. All this other stuff unwinding in the marketplace, literally and figuratively, the way it is, has left me with a deep sense of unease as to what things are going to be looking for going forward. And things I didn't have time to manage, I just didn't want to have to think about and just put them into cash for now. We can always reestablish at another time. Uncle Mike, does that sit poorly with you? I mean, you're out there looking for bargains. Are you thinking this is perhaps bargain hunting territory?
You know, in looking at it, no, I think I would still feel more comfortable if we came down more in my SPY long call portfolio. I'll explain kind of where I'm at with that, and why I'm where I'm at with that. But I'm gonna tease our listeners to make sure you listen to the strategy block today. But as of right now, in my SPY long call strategy, I've remained flat in that. And I'll just leave it at that. Listen to the strategy block to hear more.
Bit of a tease out there. Stay tuned to the strat block for more listeners. I'm just pulling up the numbers as we're looking here. I have the data from Friday for the VIX futures, and kind of a similar story we've seen of a late. Decent volume, not the 600,000 contracts out there, but 318 or so thousand that day. Again, the lion's share all in the monthlies, most of it, like no surprise, in the front month. The weeklies and others really not getting any love at all. Today out there in the options land, given, I think, reflecting the somewhat, I mean, it's not quiet. We're still selling off, but and certainly any other week that in the summer, this would have been a very active day. But about 550,000 contracts in the big VIX options. So about hitting the level of the normal ADV right now. The inflated ADV from the past few weeks is about 750,000. So coming in a bit under that, but hitting right around where the typical average is for this time of year out there in VIX options. Of course, talking about all the funky things that are afoot with the VIX. We should mention, a lot of you guys write into us all the time with the different things they put up in those Bloomberg articles, partly because we feature them a lot on our site and the stuff that they do. Because, a lot of you guys like to talk about them there. Of course, we're writing up recently about, again, our old friends over there at Goldman, Mr. Sebastian in particular. This is Mr. Gregory over there, who's a well-known pontificator on all things VIX, speaks at the RMC conference for the SIBO, et cetera, and he came out with, I think, I guess you can call it kind of maybe I don't call it but kind of I think most people would agree with him, statement that VIX is kind of being a bit wonky, and perhaps, at least at the time, is performing a little bit odd. Now, he came out and said, of course, he thinks it should be lower. I think his quote was actually 2 points lower, which was kind of an oddly specific level for him to come out and recommend, but he thinks it should be lower. Kind of overreacted to last week's kind of developments, and as VIX tends to do, shot up to the upside, which we all know that's a function, that's a feature. It's not a bug of that product. That's why people get into it. They want that overshoot to the upside. That's why everyone's loading up on calls every month out there, and certainly going forward, we're going to see a lot more of that because the calls did pretty well over this past session. And of course, so he's saying it should be a little bit cheaper. We, of course, on VolView said we think VIX actually could be a little bit higher over the past week, so conflicting with Mr. Gregory a bit, but they also talked to the Morgan folks who kind of blame a lot of last week's issues with, they call them the CTAs, I suppose. They call them the trend followers. That would, of course, lump in the CTAs out there who are doing, of course, some of the risk arb, vol arb stuff out there in the term structure, perhaps like what is being unwound right now up there in the future. They come out with some interesting number, about 20% of the overall volume, driven by what they call dynamic delta hedging. I think it would probably actually be a lot higher than that, but interesting estimate nonetheless. And they on JP Morgan, of course, tend to agree with us, saying a higher VIX probably going to stick around for a while. They also did interesting stuff. If you have a chance to check out that article, listeners, I encourage you to do so. We have the link over there at the Options Insider if you want to find it as well. Just search for, I think, Bloomberg, and VIX should bring it up for you. And, of course, they have a good chart showing how much they feel on a specific point-by-point basis over the past couple of weeks, VIX actually overperformed where it should have been, which I always find these kind of things and this level of precision attributed to VIX, a product which has shown itself to be no big fan of precision. Always kind of humorous. So Mark, I'm not sure if you had a chance to check this out, but what's your take on these differing viewpoints and just this kind of, like I said, this kind of interesting level of precision being ascribed to the VIX?
I mean, how do you say overpriced by 2 points? I mean,
doesn't that just crack you up? That was my quote of the week. I love that.
It's like the most ridiculous thing I've ever heard.
2 points. Overpriced, just 2 points. That's all.
Yeah, I mean, so why even bother? 2 points is like rounding error.
No, exactly. That's exactly what it is. It is the rounding error. That's why I had to bring this up. That one I laughed about 10 minutes when I read this.
I mean, considering the VIX is usually overpriced by 4 points, it's a non-event, non-note, and the wonkiness of this product tells me that maybe VIX is underpriced for right now, believe it or not.
It's like saying Apple's overpriced by 60 cents. It's ridiculous. It's the rounding error of the daily move. It's so absurd.
Exactly. It's just, thank you, Goldman.
So all the folks writing in about this one, yes, that's why we had to bring it up, because it's just that level of ridiculous. I think Mark is correct in that term, redonkulous absurdity. Other stuff really afoot today, but I think we'll get to that in a little bit. Now it's time for us to dive right on into our next segment, of course, the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, all of you fans out there of the wild, the woolly, the dark underbelly of the options market, we've got you covered. I know a lot of you writing in saying, hey, where's my options oddities? I need my daily unusual activity fix. Well, we're working on that for you. In the meantime, stay tuned, of course, to the Options Insider, where we have a lot of that activity. And, of course, tune in twice a week. We got you covered at least twice a week here in the old option block program, the Odd Block, indeed. And we'll work on getting you more of an oddities fix sometime soon. So all you guys writing in, I appreciate you love the show. We'll see if we can get some more out to you. Maybe update that feed for you a little bit with some more shows while we're working on perhaps a new format and some other fun stuff for that program. Don't worry, more unusual activity coming to you on the network sometime soon. Meanwhile, let's sink our teeth into the stuff that was catching our eye today, starting off in the land of some ultra shorts, in particular the UltraShort Euro ProShares ETF, ticker symbol EUO. Closing today, 24.24, off about 16 cents or about 7 tenths of a percentage point or so. This is the name that does, about 1,600 contracts a day, doing 9,000 change today. So a very, very active day. And of that 9,000, it was 103 to 1 calls over puts. About 9,000 in the calls and 87 in the puts. So that should give you some idea of where all of this love and all this activity was focused today. And of that nearly 9,000 contracts, 8,400 came in one mega trade here out there in November. A little bit longer term love for EUO. In particular, it was the Nov 24s that caught our eye, starting off this morning with the relatively paltry 500 lot going up for $1.30 paper buy-in on one block over there on the NASDAQ. But as the day went on, a few more tended to pile in to the tune of 8,418 to be precise. So quite a few falling in after that initial block, coming in, lifting offers on pretty much every exchange in relatively rapid succession, some even trading through the offer. Initially, the total volume was about 5,900 contracts that we saw initially, which fit in well with the open interest of about 6,500. It seemed like it might indeed be a buy to close. Now, as the volume has continued to outpace the open interest, it is clear that this is indeed opening paper. Only, like I said, only 6,500 open on this strike here. Looking at the chart going back for the past year or so out in EUO. It's been a bit of an interesting road. It's spiked earlier this year in February, a level of about 28, and it's kind of been vacillating between the kind of 26 and 24 range for the better part of the last 4 or 5 months or so. So an interesting time to be loading up on some upside. Someone perhaps specking that this short name is going to be off to the races again, perhaps also reinforcing what we were talking about earlier, Mark, about someone thinking this sell-off not perhaps done yet here out there in the market. So what's your take on someone buying up all the calls out here in EUO today?
Yeah, I mean it's a play on Fed tightening, and that the euro getting weaker, and there's rumors the euro economy shrinking, and there might be more QE. So if the Fed tightens and they engage in more QE, what's going to happen to the euro? What do you think?
As my little guy would say, it would be a poopy doctor.
It's going to look like the S&P futures after the bell right now. And so we could see if they really do tighten and then those guys move along with some QE, we could see the euro threaten its lows easily. And so this is a great way to take advantage of that spread. I'll tell you that much.
It would be interesting if we do see, and maybe we're kind of infringing upon around the block here, where you have the beige book coming up this week. It would be interesting to see if the Fed does indeed try to dive into those waters. It seems kind of the height of absurdity, I think, to most observers, but c'est la vie.
Welcome to the Fed.
Yeah, exactly. We'll save that debate for around the block. Meanwhile, we'll keep on rolling into our next name, one we haven't talked about in a while on the old odd block. I think they were getting a little bit lonely. Well, welcome back, Xerox, ticker symbol XRX. This one closing off about at 10.17 today, so off about 1.5% or so. So outdoing the market to the downside, still only about 14 cents or so. So don't get too excited. This is the name that does about 8,000 contracts a day, so doing decent volume for Xerox, and certainly from an odd block perspective. And today, just lighting it up to the tune of 56,000 contracts, about a good 7x and change out there, and of course, a 13-to-1 calls over puts. That will again show you where all the love was we saw today. Was on the calls side, in particular, a little bit closer to home this time, though for a lot more size. Not Nove, no. Instead, it was the October, the Oct 12s that caught our eye, going up as the day began for 22,759 times for 16 cents. Looks like paper selling as the day went on. The volume poured in to the tune of a total of 47,337 on this strike, with an open interest of 68,000 contracts open on this strike. So some serious size. Looks like we also have some stock going up. These went up price variation. If you listen to our trade tag show, or you read it on our website, The Options Insider, you know what those trade tags means, and price variation typically indicates there was some stock floating around in that level. Looks like this one up pretty much delta neutral, given the ratios you saw, at least on the first block of 22,000. Looks like it was pretty similar stock ratios for the rest of the options as well. And given the fact that there's also about 100,000 calls open on the OC 11 strike, about 98,000 and change open, it seems like we had a friend with some positions open that he may indeed be unwinding, in particular some spreads up here. I almost called you the Rock Lobster, Mr. Greasy Meatball, the other tasty food of the Option Pit team. What's your take on our friend coming in? Seems like unwinding some of these long calls to the tune of 47,000, and indeed picking up some stock to boot.
I mean, it's an odd trade because these were executed on like last Thursday. So I don't know what this guy was doing. This could just be adding to more covered calls, honestly. I'm not sure if it's a close or if we had a covered call trader on the 27th and a covered call trader today. So, as I look at these time and sales, clearly they were selling today, but I want to go to the 27th, and I'm going to guess that they sold on then as well, but that was actually part of a 1x2. So what's interesting is on the 27th, they did 25,000 of the ACA 1112 put 1x2s, buying one, selling two. So this might be kind of just an additive to, they're strapping on more premium at that October 11 strike, because, October itself, they did that big trade on the 27th, but, there's a ton of open interest on both of these strikes. So I think what we have on is somebody who's slowly turning this whole trade into like an 11-12 call spread, which maybe makes some sense to me, and or is going to turn this into a big, huge ratio spread, because he's now got basically a call spread on him. He may end up converting this to a ratio.
Yeah, what he's got right now is essentially, if this open interest is all him, he's got like about 2x3. Looks like on today's volume would make it pretty close to 1x1. Yeah.
Yeah, today's volume would make, because he doesn't own all of the 11s, but I think he's sitting on. Yeah, I think he probably is close to all of the 12s, which should put him at about 115,000, and he's probably 60 to 75,000 of the. I mean, he's at least 25, and he's at least. Yeah, let's see, 20. Yeah, I'm just looking here. Yeah, my guess is he's probably 60,000, so he's almost up to one. Almost has it on as a 1x2 would be my bet.
Listeners, a little peek behind the curtain on how we compile all of this. It doesn't just go up on the website willy-nilly. No, there's a lot of thought and analysis and debate and back and forth that goes into all of these little alerts that we compile for you. And it takes some time, and certainly a lot of estimizing on our part to throw in some silly words there. And of course, some interesting paper. Our friend is indeed adding on. Looks like he may be today. He's got pretty much all the size out here. It'll be about 100, he's 60,000 on the 11s, or you're right. But still, a ton of size open on both strikes to the tune of about 100,000 on each. So some size on good old Xerox, certainly on the name that does 8,000 contracts a day. He's better like this one, because he's wearing it for the time being. Interesting stuff here in good old Xerox. Nice to see them back on the old odd block again. We haven't chatted about them in a while. And let's finish up here in energy, but we've done a lot of oil, done a lot of petroleum. Let's go into the coal realm instead. We haven't gone into the old black gold stuff in a while. Not oil, but indeed the other black gold or coal. Talking about Arch Coal Inc. This is also our requisite sub $10 name for the day. This is ticker symbol ACL, closing at $9.31, but they were a lot cheaper this morning. They were trading $8 and change, because they're up about $1.10 or about 13% on the day. So you might imagine this is the name, and given this much of an underlying move, we're going to see some close to home options action, and that is indeed what we saw today. Like I said, this name does about 1,800 contracts a day, doing 28, nearly 29,000 of that today, and that's pretty much all across the board. Pretty much everywhere you look, every strike in the front couple of months had some paper, including what caught our eye, the SEP 10s. Going up when we started looking at them in one block on a sweep of about 300, going up on the SIBO for $1.78. Paper buying as the day went on, a lot more volume piling in to that strike to the tune of nearly 5,000, 4,770 to be precise. It should be worth noting that this stock had quite the range today. Opened at 760, got as high as $10.35 before settling out here at 930, $1 lower. So clearly those opening $1.78 kind, where when the stock was substantially higher, they are in their face quite a bit right now, to the tune of these things being $1.25 at $1.50. Still quite wide for this name, understandable given the underlying movement we saw out here today. But still, yeah, hopefully the latter kind has a little bit more judicious prices than that, because these suckers, at least the early kind, in their face. So yeah, it looks like a lot of these later kind, 3,000 went up afterwards as the buyer was sweeping across a bunch of exchange. So it seems like the lion's share of these went up in that $1.70 odd range, which is unfortunate for our friend here because he just gave up at least 25, probably closer to 50 cents on these suckers. He's going to try to get out of these right now. So he was perhaps over exuberant, I should say, in his love for all things ACL. Mr. Greasy Meatball, take us home here. What's your take on our friend perhaps having not the best timing in his love for Arch Coal calls?
Well, there's some rumors that, obviously Arch Coal could be popping. I mean, it's not the most active contract in the world, but the movement here is pretty interesting. I mean, coal is one of the names that's really starting to find interest with people again, and this is a name that is seeing its volume explode higher, really across the board, puts, calls, you name it. So it's interesting kind of watching this thing move, but the stock itself was up. It'll be interesting to see whether it maintains itself. But the current administration wants to absolutely destroy coal, and that is the story.
You're right. It was a bit of a funky day. In addition to those calls, all that upside calls, we saw puts flying 3,000 almost of the OC5 puts on no open interest, 25 contracts. So that's all open in paper. Looks like we also saw, I'll have to dig into the time of sales and make sure. Looks like we saw the Jan 2015 612 risk reversal going up. I'm guessing sell and put and buy and call. We'll have to look into the numbers to make sure there. That's all on zero open interest on both of those strikes. So someone else weighing into the fray and saying if that is indeed a bullish risk reversal, that there's a lot of upside love to come, and also about 1,000 of the one calls. So getting some deep call love. Perhaps trying to box something off here with the one calls on no open interest. So a lot of funky paper to be found out here for the looking. You can pretty much call every contract that went up out here in Arch today, I think, odd block worthy. Would you agree, sir?
Yeah, there's been some real interesting block trades going up as of late. Alcoa's seeing some interesting action. Really all the minerals and mining and metals are moving right now. Minerals, mining, and metals all moving. So I sound like a menu at Chili's.
Easy for you to say. I'm going to dig into those April 2016 one calls a little bit. Meanwhile, Uncle Mike is going to dig in for some strategy because it's time for the strategy block.
It's time to dispense options wit, wisdom, and education. It's time for the Strategy Block.
All right, listeners, I know you were deprived so mercilessly of Uncle Mike and his strategizing last week, but of course, there were some market events that kind of preempted our usual format. We're back to the usual grind this week. That means it's time for Uncle Mike to dive deep into the strategy fray, and he's promised us listeners he has at least 2 weeks worth of strategy blocks in him today, perhaps 3, perhaps even more. He's got so much pent-up goodness, so much pent-up strategery to unleash upon you. So without further ado, I shall delay him no longer. Uncle Mike, the floor is yours, sir. Strategize away.
Oh my gosh, it's good to be back in the strategy block. I missed it so much. All right, what I want to go through today are a few things. I kind of want to, there's no exact theme for today per se, but I just kind of want to give our listeners an update on some things with which I've been doing, why I've been doing them, and just a couple of thoughts on the matter. All right, last week we had a market that was moving a lot. We all know that. And with that, let's say that we have some people out there with whom they trade credit spreads, meaning XYZ stock is at 55 and they like to sell the 50-45 put spread as an example. With that, oftentimes in markets like last week, the same day that you sell the spread, the stock would have gone down, it would have gone against you. and you would have had to have rolled the spread or gotten out of it or just stayed in it and cried, I guess. I don't know, whatever choices you would have wanted to go through on that. But the issue with which I'm talking about is, let's say that you had to get out in the same day. Well, if you were to do that, you would have done what's called a day trade, meaning you sold the spread at 9 in the morning and you get out of it at 2 in the afternoon. You are a day trade. You did a day trade, and you did 2 day trades in that day, because the way with which in the brokerage world it is viewed as each security is considered a different trade in regard to the day trading rule. Now, if you make 4 day trades within a 5 trading day period, you will be considered a pattern day trader. And which isn't necessarily all that bad, but let's say, for example, on Tuesday, you need to make a trade, and you need to get out of it the same day because the stock just goes against you because of the fact that we had a really fast market like we did last week. Next day comes up, maybe you want to try a call spread and the market goes up, or you want to do another put spread because the market's going down, whatever the case may be. If you do a 2-legged trade again that next day, you will be flagged as a pattern day trader. Now, being flagged as a pattern day trader isn't necessarily a bad thing. If you're a portfolio margin account, I don't see any, it's really not going to make any difference to you one way or another. But where it can become an issue is if you have less than $25,000 in your account. If that's the case, then you'll get an email from your broker saying, please deposit more money into your account to where you can get above $25,000 because you are a pattern day trader. And if you don't, then your account will be frozen for a period of time. That's very common in the brokerage world. So with that being said, what I want to talk about today is something with which you can do to protect yourself from being flagged as a pattern day trader. Let's say you have a $10,000 account and you want that to be your option trading account, or maybe that's your hedging account. Maybe you have 90 grand in an S&P mutual fund in your 401k, and you have 10 grand that you're doing some type of a put or a put spread or something along those lines to hedge that 401k account, and you're using the entire account. Who knows? Either way, if you ever get in that situation again and you need to do more than one trade within a day, what I'd like to talk to you about today are synthetics. Let's say, for example, that you have a put spread. And once again, this can be applied in a lot of different ways. I'm just trying to give you some thoughts, some ideas with which you might be able to take on for your own trading. Let's say that you just sold a put spread and you had to get out of it the same day on a Tuesday. Come Wednesday, you get into another put spread, and you have to get out of the same spread that same day because the market's just really crazy like it was last week. And you're looking at this and you're like, ooh, I got a $15,000 account and I don't really want to have to put more money in this. And let's say maybe the trade's profitable. Whether it's profitable or loss, you need to get out of it because it's hit your profit target, or you need to get out of it because of the fact that you're at your loss point. Well, something with which you can do is create a synthetic. So in other words, let's say that you sold the 50-45 bull put spread and you need to get out of it. Well, with that, one thing with which you could do to get you through the night, so to speak, would be to sell the 45-50 bear call spread. And by doing that, you're creating a synthetic flat position, meaning that if the stock does continue to go down, then whatever money you lose on the put spread, you'll gain on the call spread. And let's say the stock does go up, well, you'll make money on the put spread, but you'll lose on the call spread. And so by doing that, is that the ideal solution? No, not at all. And quite honestly, if you trade that frequently all the time, open up a futures account. They don't care about day trading there, and trade futures options. It's not an issue there. But if you do run into it and you are a securities options trader, a way with which to kind of mitigate your risk overnight would be to create a synthetic flat position. And that's what's known as a box spread. And Longo and Sebastian can tell you all about box spreads from their days on the floor. But with that being said, that's a tool with which you can have in your toolbox as something to do if you want to avoid being in that situation and getting flagged as a day trader. Now, of course, the next day you can close out all 4 legs. Will you be able to close it out for the exact amount as what it would have been had you just got out of that spread? Likely not. You might have to pay an extra penny or two depending on what underlying you're doing this with. I personally stick to just very liquid underlying, so I know that I'm not going to get pounded on a bid-ask spread. And let's say, for example, that you had the 45.50 bull put spread, and then you end up getting into the 45.50 bear call spread to mitigate the two. Most of the time with your brokerage account, you can get out of that on the Iron Condor trade ticket, but it depends on which broker you use. Call up the trade desk for more information on that. So, quick thing, if you are in a position to where you need to take on risk for the night, there's always another way with which you can set something up to do what you want to do. That's the magic of options. Now, what we're doing right now, or what I'm doing personally throughout the course of the last week, is that when the Dow opens up a week down 1,000 points, I have a real hard time getting back into the marketplace, especially when in my SPY call spreads or my SPY call strategy, I was flat, virtually flat going into the week. With that being said, in my protected long SPY, we were and still are long 199 puts. To protect it, as well as the hedged strategic night fund, we're using the same put at this point. I may roll out, but I will not roll down until January at the absolute earliest. That's just a rule of the fund, trading rule that I create myself for the fund. Now, why don't I get back into the S&P SPY with this dip with which we're having right now? Why am I not just foaming at the mouth? Well, let's look at, first off, I am foaming at the mouth, and it's killing me not to get back into it. Whenever there's any type of dip, I do want to get into it. But let's take a look at the facts. SPY closed 2014 at 205.54. And so until we go above that mark, we're negative on the year. That's just a bottom line fact. And so long as we're negative on the year, no, we're not going to be positive on the year. I know it's just a very deep philosophical thing that I just said. And I know everyone's thinking, wow, that's serious philosophy there. I get it. But in order for us to make money on the year in the marketplace, step one of us getting up 5%, 10%, 20%, whatever you want to do, step one is getting above the 205.54 mark on SPY. Now, I understand that there's dividends involved in SPY, and it might be a little bit lower than that you could be profitable if you've collected the dividends on it, that type of thing. But let's look at this from a 10,000 foot view. I'm not going to be uberly bullish until, and when I say uberly bullish, meaning I'm not going to put a lot of deltas on the table until we actually get over the 205.54 mark in SPY. And the reason is that I want the market to prove it to me. I kind of like to view it as I'm the batter at the plate. The pitcher's pitching the ball to me. I'm not going to swing until he gets the ball over the plate. So if he throws me 3 straight pitches out of the strike zone, I'm not going to swing until I'll give up 1 strike. I'm totally fine with that. I'm not going to swing on the first pitch. And so the reason with which I do that is that I want to make sure that the market's actually going in the direction that I'm hoping it goes in, which of course is always up. But with that, until we actually get above that 205.54 mark, I'm not going to get overly bullish. Now, what might I do with us in negative territory? One thought with which I'm toying with right now is, let's say that we dip another 7 or 8 points on SPY, or another 70 or 80 points on SPX. One thing that I could do would be just to buy a December 205 call on SPY. They were around the $2 mark a couple last week at some points. And my thought behind it is that, okay, if I spend $2, then my clients are guaranteed all the upside of the market. And all I have to do is somehow come up with a way to finance $2 for the rest of the year. That's something I'm giving very strong consideration of. The reason with which I'm hesitant on there is because of the fact that it is very far out of the money. It is somewhat of a long shot trade. But what I would be more willing to do at the lower levels, or at the negative levels with which we are right now, and this is something that I'm looking to do every day since we've been lower, is sell some put spreads. It's a way with which to have some deltas on the table. It's a way with which you can have enough of a cushion and still get some decent premium. Right now, just in looking at SPY, for example, the 192, 187 put spread for this week, you can get around 50 cents for it. And this is based upon earlier today. It might not be exactly there right now, but you can probably get about 50 cents for it. That means the S&P has to fall 55 points between today and Friday. Now, can that happen? Good gosh, yes, it can. But what I like to do is sell a put spread after we've had a dip in the marketplace. It's like you've almost missed out on the first leg down for being wrong, so to speak, when you're doing it with that method. I'm still a little bit concerned at this point because of the fact that after the week with which we had last week, where we had 1,000-point drop in the Dow on Monday, and the fact that we did finish slightly up on the week in the S&P, that we are starting the day off as down as we have, and we never really did get any positive momentum going. So I'm looking to do a put spread, but there's a lot of factors that are against me right now with which I would have concern. The main factor that's against me at this point is the fact that we are negative on the year. Second factor that's against me, being the bull with which I am, is that we're below the 2,000 mark on SPX. That's a very key number in my opinion. I remember how long it took us to get above it. Now we're below it again. We got to do that again before I think we're going to have some bullish momentum. Another key number is I'd like to see us be 10% off of the all-time high, and we're not going to be there until we go down another 50 points in the S&P, in the S&P. So long story short, in terms of what I'm looking at, I need to see a reason with which to get into this market. And until we break through something to the upside or go down and stay down at a key number to the downside, I got to stay on the sidelines for the time being. And as much as it kills me to do so, being prudent with your money and your risk management is far more important than trying to just be bullish all the time, in my opinion. And that is the strategy block for the last day of August.
Well said, sir. That was at least 2 weeks worth of strategy blocks, perhaps 3. I lost track, so that was impressive stuff. Interesting you mentioned the synthetics. I was chatting with one of the, authors or forthcoming, perhaps, one of those big series, like the For Dummies, all those kind of stuff out there, talking about options, and they're gonna do one of those on that. And they were talking about what different things they should hit on, and I went deep into synthetics because I think that's something they should mention. Not so much the math, because that's off-putting to a lot of people, but all the risk equivalencies, the things we talk about on this show, even the basic stuff like the covered call versus short put and things like that. I want them to hit on that and really beat that into the retail trader's brain out there. And that I think that'll certainly open a lot of people's eyes to what they can do with options, and also what they can do in terms of proficiency. You mentioned boxes. That probably scares some people, but that's a good way to do it. Of course, just the basic stuff, covered call versus put. Do the put versus the call, save the money, all that kind of fun stuff, save all the hassle of the legs. So there's a lot you can do if you actually understand those synthetics. Good stuff, Uncle Mike. We look forward to more strategizing in upcoming episodes. Meanwhile, we have to keep on rolling. We're coming up against it now into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the program where we tell you what we're watching, what we're keeping an eye on for the rest of this week. And in terms of the market itself, I think we all are still fixated on the macro moves in the big indices. Will they, won't they? Will they rally? Will we sell off? The after-hours data we're seeing coming out of immediately after the close today, not perhaps so reassuring for all those bulls out there. Of course, all that stuff we touched on at the top of the show about VIX term structure, the futures, etc., all perhaps indicating that there is yet perhaps another shoe to drop out there. Of course, on the actual calendar itself, not so much in earnings, although Uncle Mike, I know you're excited about Dollar Tree, the other half of the big dollar cartel, announcing tomorrow on Tuesday. Actually, we also, of course, and really have the beige book this week, and so that'll be interesting. Those of you out there still playing Fed Watch, really, I don't know if I really see much merit in it. Emergency cuts in China, everywhere else. Granted, different domestic situations there than here, but still kind of hard to make an argument for Fed raising the real concern of inflation with all these other things afoot. But that said, you never know. People like to watch the beige book, so all you Fed watchers out there have more to chew upon and debate about. Mr. Sebastian, I know you're a diehard Fed watcher, so what do you keep an eye on for the rest of this week?
I think the creepy VIX complex how
I
all
like
the different
that creepy
trades
VIX
move
complex. I
against
think
each
we have
other.
a title today for today's show: the creepy VIX complex.
Yeah, no, I think it's fitting that the VIX is maybe the last horror story in Wes Craven's life. So
Sad news today.
yeah, that's definitely for sure. So that is, that's something I'm watching, is that there's just something wrong, and I don't know what it is, but it is just it's an undiagnosed disease. But I think it's something that will come to a head, especially given the movement in the back months. Somebody thinks this could last a lot longer than it may actually last. So I mean, then the market is thinking it maybe could be much uglier than we're imagining.
I bet you your friends over there at Typhon are having fun with all this term structure fun afoot.
Oh yeah, well they've been on a long signal for like a week and a half, so it's interesting to see how that trade is developing, and how how that can move.
All those people out there who've been complaining for the better part of the summer that the VIX term structure a little bit boring. Yeah, not so much these days. You got a lot to sink your teeth into if you're a VIX watcher, particularly a VIX futures watcher. Let's turn our attention now back to scenic and sunny St. Charles. Uncle Mike, in addition to all the fun stuff you just outlined, boxes, synthetics, etc., what else you keeping an eye on the rest of this week, sir, in addition to, of course, the big Dollar Tree earnings?
Besides the Dollar Tree earnings, got it. I think oil. Oil. The fact that XLE is up 1% on the day on a down day like this, I'm curious to see what oil does. It might be something with which to be a bright spot in the field of light in a sea of darkness. So we'll have to see. I like oil. I like the fact that it is moving up. That's a good thing, but oil is oil. It could have just been on some scary news, but nonetheless, I will definitely be watching it, as well as SPY 200, SPX 2000.
Important levels all. We'll have to, of course, stay tuned to see if we can hit those. Can't do it right now, though, because of all the time we have for this episode of the Option Block. But before we go, as always, let me check back in with each of my cohorts, my partners in crime here on the old all-star panel. Starting off with you, Mr. Greasy Meatball. What is cooking in the land of the pit?
We are doing a webinar this Thursday on volatility, and how volatility, the VIX and volatility. Go to optionpit.com/vol to get yourself registered. Here's the I sent Mark the link, and it'll be a free webinar, VIX and volatility, and how all this stuff works.
Whatever made you think of doing a vol webinar this week? I thought for sure you're going to do the stupids webinar we've always been talking about. Now is the time for stupids.
Indeed.
All right, surf on over, I should say, to optionpit.com/vol to register. Those virtual seats are indeed finite, so surf on over. They run out of bits eventually over there at Option Pit. They can't seat you all. Surf on over to optionpit.com/vol to learn more. That means, Uncle Mike, there is room on the calendar this week for you to do the much-awaited Stupids webinar. Is that coming down the pike for us, sir?
I'll tell you what, if someone opens up an account with me and they want to know about Stupid, special offer for this week, I'll give you a half-hour one-on-one phone call on the Stupid, anyone who opens up an account through me.
Does that include me if I call up and put $1 to work? Do I finally get my Stupids webinar I've been waiting for years for?
Nah, for you, I got the minimum of probably about $3 million.
Let me go get my wallet.
That's chump change to
Chump change.
That's what I was thinking.
Let me break open the piggy bank.
What? Got 1% of his net worth. You can. I can't believe you couldn't toss that your way.
That's what I was thinking too.
A Stupids webinar easily worth that.
Easily, but anyway.
I mean, based on our salary that we get here at Option Block, Longo's got to be killing it.
Crushing it, sir.
So I mean, my salary's gone for Option Block has gone up 1,500% this year.
There you go.
Don't tell Tosaw; he's going to get jealous.
Well, you might not know this, but the salary that he pays me, it's gone up probably about 25-fold.
Wow. Look at you. How did you get more? You're killing it. I got to renegotiate my contract now.
In actual real-world dollars, Tosaw is probably lapping us all right now on this show, so he's doing pretty good over there. Uncle Mike, tell us how you can do even better.
All right, call me up, folks. If you want to open up, if you want to trade through the RCM umbrella through either TD Ameritrade and/or Interactive Brokers, we do have a pretty nice commission rate because we do have over $100 million of assets under management at RCM Wealth Advisors. And if you would like to ride our coattails, so to speak, feel free to contact me and learn about how that could work for you. Also, we provide advice at RCM if called upon to do so, and we're more than happy to help in any way with which we can, especially on weeks like last week. Feel free to give me a call at 312-212-3531 or send me an email at mtosaw@rcmfs.com.
Yeah, if you like sleeping at night when you have some money at work in the market, you maybe want someone to put some protection in place for you, maybe to babysit that protection for you, maybe to pay for that protection for you. I think a week like last week, that could have come in handy. So give Uncle Mike a call, shoot him an email, and hey, at the very least, you sleep better at night, and that is certainly worth whatever he may charge, which is certainly a ton. No, I'm just kidding. Of course, his rates are very reasonable. Uncle Mike, you can hit him up for more info. I know a lot of you have already done so. Keep it up. His schedule almost full, a couple extra slots. Take him up on his offer. And on behalf of Uncle Mike and the Greasy Meatball, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And of course, for sending in such great questions. Keep them coming. We'll get to them on Thursday. And we'll, of course, see you right then for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.